Okay, we went over what going long is. Everybody knows going long, buying low, selling high. Going short is the same thing except opposite, to take advantage of the downward trend. So we sell high and buy low. We went over support and resistance. We went over key levels, otherwise known as pivots, which pivots and key levels can be used either as support or resistance. So that means the stock will either bounce off it. The stock has a high probability of bouncing off key levels. That's what that means. We went over volume. Oh, another way that I like to explain volume. So imagine you have an auction for a brand new Lamborghini in the middle of Idaho. How much volume are you gonna get in that auction compared to the same auction for a Lamborghini being held in New York City? You're gonna have way more volume in the auction in New York City. So that means you're gonna have way more buyers, way more people bidding for the car. And eventually, since you have way more people bidding for the car, the one that's in New York is gonna go for a higher price than the one in Idaho, right? Because you have more volume, you have more people, you have more people saying, "Hey, I got $1 million. No, I got blah blah blah, $2 million, $3 million." Meanwhile, in Idaho, oh, I got $100, and you is the only person there, right? So that's what volume is. A stock cannot go up without volume. Period. So, what's the next thing we're gonna cover? We're gonna cover simple moving averages.
Quick
And why?
question about volume.
Sure, sure.
Is it unprecedented volume at this time because of COVID?
You know what? For the market, so I don't even have a year doing this, right? Now, one of my friends that he was valedictorian in high school, he's been trading for a very long time. He told me today that there's massive amount of volume in the market right now, especially in pre-market and after hours. And what pre-market is anything before 9:30. So typically trading happens from 4 a.m. all the way to 8 p.m. But the market is open from 9:30 a.m. to 4 p.m. So anything before that is
That's
pre-market.
Eastern Standard, right?
Yeah, Eastern time. It all runs on New York time, New York Stock Exchange.
Yes, that's what the exchanges are.
Yes. So before 9:30 a.m. is called pre-market. Market opens from 9:30 a.m. to 4 p.m. And after hours, abbreviated AH, is from 4 to 8. And pre-market is abbreviated PM.
Is there a benefit to doing any sort of trades pre or market or after hours?
Absolutely. And I'll show you why and how. So, for example, you see these gaps in the candlesticks? This is the daily chart. This is Apple's daily chart. So, you see those gaps going on? That means that the stock moved when the market was closed. So, it either moved pre-market or it moved after hours. In this case, look at this. That gap right there. And a lot of stocks, especially penny stocks, they every stock has its own personality. Every stock moves different. Every stock, some move crazy, some move very slow, and some like to run after hours and pre-market. One of those examples I can give is Naked. I actually called this in the chat when they were about to short squeeze. So I called them in the chat at 60 cents. It went up all the way high to $3 and 40 cents. So if you go from 60 cents from $3 and 40 cents, that's a huge gain. You know what I'm saying? That's I can't do math, so I always got to use calculators. So 3 divided by 160. You would have multiplied your money by 5.6 times if you would have gotten a 60. And why, how did I know? Why did I call this out at 60? So there's a website where I do all my research. I do most of my research on this website. It's called finviz.com. Finviz.com. And you have a whole bunch of resources at your disposal on this free site. So that particular day, right? This is Naked's chart. That particular day, it was this big green bar when I called Naked at 60 cents. So how did I know? How did I know that they were gonna go up big? Well, I opened this up and it tells you how many shorts there are in the stock. So you see float? Float means the amount of publicly available trades, publicly available shares to be traded. So Naked has 424 million shares float, publicly available to trade. Of those 424 million shares, on this particular day, 15% was short. So 15% of 424 million shares had an open short position. Now, how did I know that they were gonna go up crazy? Well, this particular day, it had 3 times the average volume. So I saw this going up, and I went to Finviz to check the amount of shares that were short, and it said 15%. Now, okay, how do you know where shorts entered? All you have to do is take the previous high. The previous high is here at 60 cents. And I marked that level. And I called that out to the chat this particular date. So we're gonna rewind to January 27th. That's the good thing about Thinkorswim. You can actually rewind and play it like you were that day. So we're gonna go to January 27th. We're gonna go to, I think I called it at 11:45 or something like that. We're gonna go to 11:50. See what happens. So 11:50, right? So this is the minute chart. Look how I noted 60 cents. This is where I marked it off. What you draw on one chart, you're able to see on every chart, on every time frame, should I say. So I drew this line on the daily chart. So we're gonna go to the daily chart to see it again real quick. Daily chart. I marked it off where the shorts entered. There were 15% of the float was short. So on this particular day, I'm like, yo, once it passes 60, all the shorts are going to be at a loss. So they have to cover their position if they don't want to lose money. So what happened? Look at these volume bars down here. This yellow line is the average volume. Look at the volume bar right here. Look how much bigger it is than the average amount of volume. So we have a super amount of volume. We have a 15% of the shares are short. They have a short position open here. Anything past 60, then the thing is gonna fly, right? Since everybody has to buy back the shares that they borrowed to sell. And that's exactly what happened. I called it out at When they were 57 cents, I said to the chat, a short squeeze is imminent at 60, and that's exactly what happened. So you see kind of this little battle going on between the bulls and the bears at the 60 level, and then it just takes off from the 60 level all the way to 96. And if we fast forward a little bit, I knew naked loves to run after hours. So that's exactly what it did. We're gonna fast forward to 6:50 p.m. to see what happened. 6:50 p.m. Let's see. January 27, 6:50. Go to the daily. Oh, whoops! It went to 6:50 a.m. Let's see. Boom! Look at this. So I called it out at 60 cents, went up to 96, came back down. This is how noting key levels works. So it broke that 60-cent level and came back down to retrace it. Bounced back off it, went down, bounced off that 60 level again, and then it kept going up. Kept going up. Let's see what happens. So I called it out here, 60 cents, went up to 96, came back down to retrace it. It bounced back off it, and then it just went haywire. So look at this. At 96, you got to mark that off too, just to see how the stock responds, right? Because that's resistance. It bounced off of here. So once it breaks this level, it's gonna go crazy. So if we notice, goes up there to test it out again, boom, bounced off it again, came back down, right? And you want to mark that. You want to mark where it bounced off of. Boom. Once it broke through that 96 level right here, that it made right here, once it broke, it just went crazy. Went from 96 all the way to $1.05, right? And then after hours, I even said in the chat, I'm like, yo, naked loves to run after hours. And what did it do after hours? After 4 o'clock, it just went crazy. All the way up to $3.50. Came back down and retraced. But the point was that it short squeezed. So everybody that was in short covered, that caused massive volume, and the stock went up. So this is the minute chart. You could always change time frames. 10-minute chart. And you'll see the same thing. 1 hour chart to get the overall trend, what happened. I like to use 10-minute chart and 1-minute chart.
With the after-hour trading, is there a risk that your trade won't get settled? Let's say if there's low volume.
Yeah, but you know, on something like this, when you have massive volume, you don't have to worry about that. But on some like unknown penny stock type of deal, then maybe you should worry about that.
Gotcha.
So we're gonna talk about simple moving averages.